what a day! This wasn't supposed to happen to Sunday night.
Oh, well, I'm glad it did.
Yeah. Okay, you know what? Pass the hat around, you mother. No, never mind. I have to watch my son.
Ira, admit it. You love us.
You know, it was that last 5 minutes when you were going to leave, Ira, and then you came back. Yeah. Then you stuck around and you started talking about that stuff. That's when I bought the Lottos in the queues.
Yeah, that's good. Amen. Hey, listen, again, the structure of this room is to be prepared. And it doesn't mean, it's like I said, all it was is opinion. It's still an opinion. You know, it's hard to believe how aggressive. But it really calls to the question, and people are upset with me because I had this conversation several times today. This was a very bad decision on the part of Jay Powell to even give a speech today, because you see the way that the White House interpreted it. They were expecting a policy statement. Well, that wasn't going to happen, but it really calls the question how much the market looks to this, and that makes him vulnerable to Trump's, you know, aggressive tweeting. And today was about as aggressive as we've seen, and I still don't think we've seen the end of it. So, but it was interesting. Eamon Javers actually did a nice job of reporting that out, of who was meeting with the president today: Lighthizer, Navarro, Kudlow, and who was the fourth? Oh, Mnuchin. So the genius. Well, I have great respect for Lighthizer. The rest of them I have very little respect for, but what do I know? Not much. So what else have you guys been talking about?
Well, we've been on the VIX. We've been on the, you know, my point to everybody early in the morning was that the easy trade was going to be along the metals.
Ezra just put up 3.6 billion MOC.
Oh, yeah. No, they're selling off. We're going to 30 points on the close here, 20 points at least.
You know what, Judd? You're right. It was the metals. And I started playing with the gold Swiss spread, and I said, you know what? Then it was just the currencies, because I said, well, what's going to go on here? What is in his arsenal, meaning Trump's? And if he goes into tariffs on Europe, and I'm still convinced we're going to see them or hear, we don't see anything, we hear them discussed. I still think we're going to see that because why not? Now he's going to open up a two-front war. You know, is like another big voice. You know, let's go open up a two-front war. Whether it's advised or ill-advised, I think it's ill-advised. But you already see what's going on at the G7. Now that goes center stage. But I thought the speech today, you know, Judd, as I chatted with you, because I actually read the speech, and it's again, I don't like that the media gets these a half an hour early. So we do better when everybody gets it at the same time, and we all have to read through it, because it's the nonsense headlines that start making it out that really drive these markets. And I bang the table about that a lot. A lot of people don't like it, but I think that the regulators really need to be better attuned to the proliferation of news sources, news outlets, I should say, and the headlines that they create. Because again, lack of context, but a lot of headlines. And that's what drives the market.
Frequency guys are paying extra for that feed.
You know what? I'd like to really get some real hard data. All I know is anecdotally, but I'm an experienced trader, and I can see, you just get a sense of what's going on. So, and there is a proliferation of news outlets, from who owns these. I'd like to see absolutely full disclosure.
Yeah, so trade the news, all these guys.
Yeah,
so,
no.
Ira, can we dig down on China just a little bit? See if we can, flush out China's psychology or their thinking. So,
well, yes, that's a great place to start.
All right, so hang on
because that's what's driving all of this.
Angela, just hold that thought for a second, you guys. The two things I'm looking at, Ira, the one is, we're back through the ORH level in the Swiss franc and the future to the upside, dollar Swiss is down.
Uh-huh.
So we're through that monthly breakout level again, which is like 103 in the Swiss futures, and it's $97.64 Swiss. So you got to look at dollar Swiss as the better signal than the futures.
Yeah, and the Swiss are really going to get. I don't know how they're going to defend this here. Euro Swiss is still interesting cross. We had a high of 109.30 today. That chart, of course, has looked heavy, and yet they keep coming in and sustaining it. We'll see. It's a good catch. And now we're coming again into the September period. Not a good way to end out this month, I will say that.
And the bigger stuff to me is that, hold on a second.
Yeah, easy there. We don't want anybody dying.
It's been brutal. Is that gold euro chart that I sent you?
Yeah, beautiful.
I mean, that thing goes. That's $80 higher in the gold, and that's exactly like that SPU bond breakout from 2017. It's the same deal.
Yeah. Hey, wait. I'm glad you brought that up. Now, the SPU bond, on a monthly chart, the 200-month moving average, 1631. And you remember that number? That was the one that I put out in October of 2017, that was the big breakout. That was the exact number, 1631. And it's now the 200-month moving average.
Going up. Yeah.
You can go. You know what? I
got it up right now. The pit is like the pit shows 1610, and the actual pit is going to be a little different.
Oh.
Yeah, it's 1630. Wait, that's the wrong one. Hold on.
You see that? And if you go back, and I think it was September 27th of 2017, somebody could actually. I wish people would start archiving more of the blogs. You can go scroll back. But if you scroll back to, it's either the last, because I wrote that was a huge breakout level. It may have been October 4th or something, because that was the high that was made December of 1999 on that spread, if you remember. And we were finally getting to it, and then it blew it right out. And we got like a 10, 12% move really quick.
Yeah.
That's the number. 1631. I can't believe the synergy of it. When I was scrolling through my work today, I saw it and I go, wow, look at that.
Yeah, and that's what when you were at Top Step with Credelli. That's what gave the 29.65
You're right.
target. That was
that was 2016. Maybe I'm a year off. Yeah, it was, I think, 2016.
That was October 2017, and both of us thought it was going to break 30 handles first to give us that gap fill, and it went straight up.
Yeah. I remember that level was huge.
Yeah.
And here we are. Now we're on the two. Wow, that's how much work we've done. So I'm amazed at, the work that we've done here to get to back to some of these levels. So very interesting.
All right. So we can get back to that if you want, but I just wanted to, just to pull out a couple of those charts for you guys to take a look at it, because and I'm going to pull this gold euro spread over just so I can so people can see what I'm looking at. There it is. Okay. So they don't like that. CQG didn't like that. There it is. So you can see now you got a top here from 2012. It starts going through here. It's just going to be like that same breakout in the S&P bonds. It's just going, and it's going to go exponentially higher.
Okay. All right. So let's talk China for a minute.
Okay.
That was a brilliant move on their part this morning. You couldn't have timed it better. Brilliant. It was brilliant. I tongue-in-cheek said, "Oh, Xi must have been short SPOOs." Because why not? Don't laugh. If you don't think the Russians and the Chinese, those are autocratic governments, why wouldn't they be trading? They could see what's going on and the way markets react. And I'm not being facetious. That's not even a flip comment. Just let's watch and see, because the timing of that Chinese announcement was really well done, right? Yeah. Right before Jackson Hole was really taking off, the market had been up in anticipation, and then they come up with that. And it caused a lot of consternation. I mean, I was in the car driving. When I left, the S&Ps were like 13 handles higher. I was actually short a little gold and long the silver, and that actually turned hard because the gold went from being like $3-4 lower to about $4 or $5 higher. So and the silver didn't really move that much. Maybe went up to 708, 709. So it had actually reversed that spread that was working all night. So it was really brilliantly timed. And coming into the G7. And this G7, we talked about yesterday, which, as Judd said, you guys flushed me out with my thinking, and I'm glad you did because we got much more in depth on it. This G7 is very interesting. Very, very, very interesting because there is no communique. There's no statement coming because I think that I go over this.
You actually just got your first reversal all day on the 25x3 and the SPOs.
Yeah, that's on that. Yeah, but that was from the MOC sell-off. I sold a shit ton of. I sold a bunch of them at 48. I haven't sold that many in a long time, and I covered them all the way down. I scratched the last half of them, but it was just for an MOC scalp.
Because he needed to do it.
There was no other reason for it outside of the fact that I knew that there was 3 and they were going to break them 20 points, and they did. Anyway, I'm staying short what I've got left, unless we close above 67. Then I'll get out.
All right. So Ira, keep going.
Okay. So it was really brilliantly timed and ahead of the G7. So he got a lot of bang for his buck, and now this becomes an issue in the G7. Right now, with no communique, the biggest issue confronting them, of course, is what's going on in the Amazon rainforest, and this is what they're focused on. But and I'm not making light of that, by the way, because I think that's a very significant event in the Brazilian rainforest, and it's very important for the world climate and the atmosphere. But China really pushes forward and makes Trump to be, we talked about how aggressive I thought he was going to be anyway if Powell didn't deliver the kind of speech, and we got that. Now it's going to get ramped up more because Trump is you could see he's in a fiery mood. He's going to Biarritz, where the G7 is, and they're expecting some modicum of demonstrations anyway. Macron is way over his skis, and Trump is going to go after him. He's going to go after Merkel too. So let's see what the discussion takes place. But now he's got some fire in his belly, and he'll be pushing. So it makes that scenario even more interesting as far as I'm concerned. So, but it was brilliantly timed. Really brilliantly timed.
6 a.m. and it was 6 a.m. Saturday morning when they released it too.
When they released what?
The Chinese, when they released that thread, it was 6 a.m. and Saturday morning for them. So it was, all timing.
Yeah, it was Shabbos. I'm sorry. So yeah, you know what? It's an interesting time. It got the markets. Wow, did the markets respond? So
I like your comment on this statement here. I think we have we see now we have a full-blown political crisis going on between the United States and China. I think, and we also have a political crisis emerging, and it's about to get real hot in the EU and Brexit and all that. But with Macron in the middle of it, trying to antagonize everything. So,
right.
you know, markets and political crisis, these are historic events in it. So we might be on the cusp of a historic event. You have a historic, you know, euro gold relationship about to break out. So there's a lot of stuff showing up.
Yes. Yes. And it really is amazing. You know, when you listen to the media today, I mean, CNBC was like, everybody on there was like deer in headlights today. Deer in headlights. And I thought some of the interviews, I'm waiting for the Clarida interview that's coming up, but I thought that some of the stuff was nonsense. You know, listening, I used to really like Loretta Mester, but she was, I really, as I listened to it, that's when I was driving in, I was listening to it, and I'm going, wow. You know, I've had better discussion in high school economic classes, to tell you the truth, when I've gone to lecture. No, I'm not. It engages better, and they just let these people spew. And my attitude is, look it, this is so much bigger than telling me we're at full employment. How many times can I hear we're at full employment? We're in full employment. Everything looks great to consumer. Not one time when they discuss this consumer do I hear mention about debt. We talked about this yesterday. Nobody talks about how much debt the consumer is taking on to sustain. So if you keep bringing forward, and I know Angelo's raised this, we've talked about it, if you keep bringing demand forward, you're not as healthy as you think you are. And that's the missing link when we have these discussions, is that, hey, hold on here, what are we discussing, and why isn't anybody bringing up the debt issue? Why? Why is this missing here? And it's really irksome as far as I'm concerned. It leaves too much out, and I'm.
Ira, that's a huge issue. Huge.
I know it is for me.
Okay.
Ira, do you think this might be with how everything's snowballing, kind of a Guns of August moment for the world as a whole?
Who asked that question?
Brian Silcott.
Yeah, good question,
Brian. Brian, it's a very good question, and it's the second. One of the smartest people I know in global macro stuff, my friend Kevin McCarthy, brought that point up today about a Guns of August moment. I said, I don't know, I'm going to have to go dust off Barbara Tuchman, who I love to read, always did. It is an interest. Is this a Guns of August? Yeah, maybe. You know, because you put things in motion, and I think that's what you're alluding to, and that they just can't pull back from it. And that's my problem with the incendiary nature of Trump. You know, the goal may be certainly worth, but you don't always have to be so incendiary, because at some point it stops really getting productive. And you see what the Chinese, they're onto it. And finally people realize Xi doesn't have to run for election. And let me tell you something else, and I would say this to Mr. Trump. The ability of the Chinese to sustain pain is far greater than anybody who's listening on this conversation. Hold on just a second. Hello.
Hello.
Yeah, I'm back. Okay. So I think that, yes, we're getting there, because at some time you have to lower the pressure. You know, there's too much elevation. And again, it's a dynamic thing. It's not static. The Chinese aren't just sitting there, as we saw, and they're taking every punch you're throwing at them and going, oh, gee, Donald, can I have more? Yes, I'm going to eventually cave. No, it's not going to work like that. And the pushback is coming, and it's real, and others are pushing back too. We haven't seen it quite yet. We'll wait to see what happens with Europe, because if I'm right, and I stress, if I'm right, and he opens up that issue, which I'm looking for him to do in the G7, and now certainly because he's got a lot of fire in his belly, and he seems to want to keep raising the temperature. This is now going to get. I mean, we really could light it up to another level. So it's a very good question, Brian, and I think we're getting there. We're getting there, and I'm not sure that it's. Again, he called in his team of 4. I don't know what they discussed. We're supposedly going to get something this afternoon. Again, he's going over to France for the G7 meeting. So I mean, we have all these things in play, and there are a phenomenal amount of play. And we're not even talking. We have not even talked 1 second about the geopolitical risks that still exist out there. The geopolitical risks. We haven't talked about Iran. We haven't talked about Russia. There's a lot of things we have not even discussed. What's going on with Brazil, and now Brazil is now the culprit of the G7 is now going to become the focus because Macron. And I don't know, did we discuss what Macron? Did I read you that piece yesterday from the FT? What Macron talked about?
No.
Why there's no? Okay, let me read this so we get it on the record because it's from the FT. And it's not from what they say. Well, it's from yesterday. And it says, Macron says G7 will not issue joint communique to avoid a row among leaders. Okay, so he doesn't want any conflict. This is his baby. He's the host. And as we know, when the G7, whoever hosts it, gets to set the rules. But here's his rationale. Okay? This is at the end of the article from the FT. And it says, Mr. Macron said he hoped for intimate and productive discussion among presidents and prime ministers rather than an all-night session to agree to a bland communique. And this is a quote now. This system is a perversity because it bureaucratizes the thing. None of the leaders discusses them in advance. These are the quarrels, now listen closely, of bureaucrats and the deep state. Now, this isn't Donald Trump. This is Macron. The communiques reflect the deep positions of the French bureaucracy up against the American bureaucracy. And the role of leaders is to veer away from their historic positions, to take liberties, to decide, and to give instructions to their administration. Now, if you haven't just, laughed, because this is a pathetic. And the fact that they let Macron, I'm not letting them get away. That statement is so disingenuous. I can't even answer it because he says, well, these statements, these communiques are nothing because all they are the battles of bureaucracies. Well, if that's the case, what are we even going through this? Which anybody who's read my blog for 10 years knows that I'm very open that these are the biggest joke and all they are photo ops for leaders back home. But he just says that. But more importantly, is that this is for Macron to use the phrase deep state. He is the deep state. That's what France is, the deep state, because they're run by what are called the anarchs, who all went to the same universities, from the Sorbonne to graduate school, in which they become embedded as professional deep state people. That's how you rise in the French administrative edifice. So I found this article really, really bordering on absolute absurdity. And Alexander Harris on Bloomberg Radio this afternoon used a great phrase. I never heard it before, but it's dead right. She said, this is all now a cycle of absurdity. And it is. It's a cycle of absurdity. Yeah, it is a great line. I left her a voice message. It's a great line because that's what it is. And the host on Bloomberg Radio said, that'd be a great name for a rock band, Cycle of Absurdity. But that's who we are. That's not a feedback. This is just a cycle of absurdity. So that's where we exist. And you saw the action. And I know this group was prepared for it in some fashion. I'm not saying, listen, we had everything right, but we had discussed pretty deeply that things were not as they appear to be, which of course, I always believe that they're not and you got to dig a little deeper and find. So I would look for some. I would look for some interesting stuff out of the G7, not a communique, but the battles. And I'm interested to see what Trump raises, as you know, how he's going to bring this to a boil or a further boil.
Well, I think it really gets down to how much he wants to blow up the stock market to get his political wins, and to see if he thinks afterwards that he can rally the thing back up so he can get reelected.
Yeah, you know, and I'll, you know, I don't know, you know, everybody thinks he's, you know, bullish stock. He wants an up stock market, but it's sometimes I think he loves the volatility because he likes to unnerve the Wall Street crowd anyway. You know, I've written about that. It's just
he also would want a rally to start, you know, like in July of 2020 or something. You know, that's when he wants.
Oh, sure, absolutely, and he would like it for it to continue. But if he puts some pain on certain sectors, I don't think he's opposed to that, because then he can turn to Main Street and say, "See, I'm not all about the. I'm trying to do what's right for the country." And even if Wall Street doesn't like it, so much the better. I must be doing something right.
I like your comment when you said, you know, regarding China. We're not there yet. The more I study the Chinese, right, I've come to the conclusion that we're not going to see a trade deal anytime soon, because I can't figure out what it would look like in order that the Chinese economy doesn't suffer any further. So when you said we're not there yet, what that means to me is that the U.S. and China have to both simultaneously suffer the point of maximum pain so that we get to the point where both leaders go, you know what, this just isn't worth it. We have to do a deal. But I still can't see what a deal for China would look like that doesn't harm them in some way, and cause their pace to slow further.
That's a very good point. And again, who can endure more pain? And what is pain? You know, I hate to ask the existential question, what is pain? But who can endure it? You're talking about people who are 70 years removed from a revolution, 50 years moved from a horrendous cultural revolution. Up until 1979, they were so dirt poor. Dirt was a luxury. You know, so it's not that long ago. And yes, you know, I understand the concept of rising expectations, the revolution of rising expectations, or what's known in social science as the Davies J-curve. Yes, it's real. And you have rising expectations, and Hong Kong's not rising expectations, by the way. That's just political freedom. For people who live politically free for a long time, have a lot of wealth, and they're not willing to be, with that extradition, they don't want to be held captive like that. Well, let me tell you something. You know, what Brexit is also about is very similar to what exists in Hong Kong with that extradition law, because in Europe, the European Court of Justice has a warrant, a European-wide warrant, it's called, and it is very restrictive. And in fact, there are people, Bernard Connolly especially, who's argued for years that it's absolutely overturns the Magna Carta. Now, I know this is esoteric stuff, but that's how repressive it is. Because don't forget, the Magna Carta, especially because we're Americans and we've lived really free, because the Magna Carta, which set the standard in 1215, if my history is right, and the ability the writ of habeas corpus is paramount to a free society. That they just can't lock you up without charging you, or you know, or bringing you before. It's very important, and you know, that again, don't think that that's not part of what has driven the Brexit discussion. I know it's all about immigration. I know it's whatever the narrative that the mainstream media, and I'm not picking on the mainstream media. I just pick on them because they're lazy, and they just present the easiest more than any. I'm not making a conspiracy. It's just easy, and that's what they pursue. But some things are not so easy to understand, and you have to dig a little bit deeper. That's where it exists. But the ability, and I laugh when they bring on these guests on CNBC, and they don't take into the account of how much pain the Chinese can take. The Chinese, they're like the Russians. They have an ability to take a lot of pain because they've had a lot of pain in their lives. And it's not like they're looking for it, but if there's, and they know how to circle the wagons and circle around the flag, and they can absorb some hits.
Ira, kind of along that thing too is, especially the Chinese now, I really think they believe this is a moment in the history of that ancient country where they are going to realize their destiny to be, this great, great, great power, and maybe the greatest power in the world. And that, this the United States is thwarting that right now. And politically they may look at this as really high stakes, and that means they'll really want to fight about it.
Yeah, and I don't believe in this containment. Containment was a beautiful thing when you sought to contain the Soviet Union, because I think the Soviet Union was a different type of aggressor, and it was a different time in history. I'm a much bigger believer in the theory proposed by, again, the guy who I think is the premier political scientist in the country, Graham Allison, and his work on the Thucydides trap, and how we get into a situation where we don't want to make room for the next up-and-coming power. And I think that it takes a very enlightened leadership to be able to pursue that. It doesn't always have to be confrontation. It's not to say that the Chinese haven't abused and disabused. They have. But you know what? Again, a lot of that is the responsibility of corporate America, who were willing accomplices because they wanted access to how many book titles said 1 billion customers. You got to have the 1 billion customers. And they rushed there, and they knew that the trade-off was. And they went into these partnerships, and they surrendered intellectual property for the ability to have access. So, I mean, I'm not condoning what the Chinese have done. I'm not whatsoever. They have abused the system because but we were accomplices and we let them abuse the system. I'm talking about we as a nation and a policy.
Absolutely true. I mean, Ira, the point of maximum pain for China, to me, would seem like it might be in the area code of you start getting fractures in the social agreement between the Communist Party and the Chinese populace, whereby, look, you let us rule the country, we'll make sure you have jobs. So to me, the area code might be where they begin to get rumblings of social unrest because of the breakage in that social contract. I don't know. But also the Chinese don't really care too much about the stock market the way the United States does. So the point of maximum pain for the United States might be somewhere in the area code of a recession and a stock market that's 800 S&P points lower, definitely in a bear market somewhere. But like you said, we're not there yet. I don't know what that area code is going to be, but I really do think that American investors are completely underestimating the lack of a trade agreement and what's going to happen to our financial markets between here and there.
Well, I wouldn't invoke the stock market, because I think that is a really a sidelight. And for most of the country, if the stock market went down 20-25%, it wouldn't give two hoots. I believe that. And I think Trump, one of the things that doesn't scare Trump, because again, there's so much of the country who has not partaken of the wealth effect from the Bernanke portfolio balance channel. But so I'm not, that's not the pain. The pain is what's going on in the heartland with the farmers, with some manufacturing concerns. I think that is far more, and that's real pain. And again, they don't have anything to cushion it.
Yeah, that's why I described it as a recession. I mean, does it have to be as bad as 2008? Maybe. I don't know.
Listen, I really don't give a crap about whether people lose money in the stock market. I don't. They've been unduly rewarded, I think, because of ultra low interest rates, which has come off the back of anybody who's a saver. So, it's a very two-edged sword. Would it drive housing prices down? Okay, if it did, that would benefit a lot of people because a lot of people can't afford the ramped up housing because of the low cost of money. So somebody would benefit. There's a lot to this, but the hardship and the endurable pain, that's not, again, we hope that we don't get there. And even the Fed keeps, even in Powell's speech today, he talks about, some of these things, and it covers a lot of stuff. But I think it was a very ill-advised speech. I think it said nothing because he was too afraid. Why give the speech? And if I was him, I would have canceled it after the Chinese came out this morning. There was no good to be had from this.
Ira, do you still think that financial markets are underestimating the possibility of a trade deal, or are overestimating a potential trade deal?
You know what? They keep trying to sell themselves. It's the only reason that I even listen to CNBC at times, because all the salespeople come out and tell you, well, the United States is much more insular. Trade's not as important. You can sell. Everybody is out there selling. But you see today how vulnerable it is. You see how vulnerable it is. This is real vulnerability. Your market proves itself very vulnerable to it.
Well, that's kind of my point.
Yeah, I know, and I'm going with you. Yeah, it's vulnerable, and I don't think these people have a clue, because again, they've been spoiled on zero interest rates and negative interest rates. So listen, again, if you could get 5% in a 10-year Treasury, you sure the hell wouldn't be rushing to buy stocks. I got news for you. You'd be much more selective. Now, everybody's a passive investor, so that way you get a little bite of everything. But I don't know. It's I think, so now all I have to do is listen to talk about the yield curve. But I think Santelli was right that Dick Mulvey, when I listened to it today, it's, again, yield curve, without context. There's no context to when these yield curves did this and that. This time it's different. I always run from people who say this time it's different, because if you present that, well, this time it's different, tell me what the context is. And if you don't have the context, that historical context, it's meaningless to me.
Ira, I'm going to bring up Peter Bookbar for a minute.
Okay, hey, Angela, 1 second. Ira, you want to turn your friends off or down, please?
My who?
Are you listening? You the one that has the TV on?
I do, and I'm sorry. Let me turn it off.
Just turn it down so you're off.
Yeah, I was just waiting for Trump to.
Oh God. Okay.
To say something.
I'd rather listen.
So, Peter Bookvar. I'm probably going to butcher this, and I'm not sure I completely understand what he's saying. I have to go back and reread it, but something to the effect that if the Fed were to lower rates 50 basis points, that we could end up with a reverse effect, something whereby it actually has the effect of reducing liquidity as opposed to creating liquidity. Does that ring a bell to you?
Yeah, you know what? First of all, there's a lot to the plumbing. There was a piece put out yesterday with Zoltan. I'm going to butcher his last name, but he's really, really good on the plumbing. Talking about with the huge amount of T-bills that are coming to the market in October, that it's going to drain a lot of liquidity away, and it's going to even tighten rates further. So yeah, you know, I'd have to see exactly what Peter said, but So if you cut the rates, you know what, and you tie up money in certain ways, I'm sure that's what Peter's alluding to, you're going to get less liquidity. And if, you know, don't forget, now they're trying to change, they're changing the wrong rules. Of course, Wall Street has, you know, played upon the Senate. This is a major mistake to play with the Volcker rule. For what purpose, I have no idea, except for certain banks finally won the way and are calling it deregulation. I think it's a gigantic mistake. But if you're going to play, you know, certain of the liquidity regs, and that's what Peter may be alluding to, the high quality liquid assets that you're going to be forced to sustain, may in fact have that. And the money is not going to circulate because our bank's going to lend. That's probably where he's really going. As you keep crushing these margins, and nobody's banks aren't lending, so no. And Powell, I disagreed with today when he talked about how healthy the banks were anyway, with the cushion. And interesting that he went that route in his speech.
I think you nailed it. I think you nailed it. It was it would incentivize the banks not to lend and thus tighten up credit. I think that was it. Okay.
That's probably right. You know, and again, they keep nibbling around the edges here because Powell, and I feel for the man. He is caught in such a bad, you know, he's trapped between Mario Draghi and Donald Trump. He's trapped, and every time he has to come out, and he's not forthright enough. It's not his way. I mean, today, if I was him, I would have said, yeah, here's my policy. I'm raising interest rates 25 basis points to where they were. You go figure this out. The economy justifies this. That's where we're at. But, of course, he can't do it. He wouldn't even take Trump on directly and say, hey, get off my back. This is what our mandates. We're performing to our mandates, whether you agree with them or not. That's what the law says. And that's what we're doing. And you know what? I'm not getting involved in tariffs because I don't understand them enough, and we don't understand what the lag effect is. So if you want to go down that road, fine. But I can't cut rates because I don't really know the effect of it. And because we're traveling blind here, you're asking me to do something that I can't justify from a policy perspective. I would respect that. But no, you know, everybody's here just, you know, they're going in circles. It is. It's a cycle of whatever the phrase.
We're going to remain data dependent.
Yeah, that's such nonsense. You know what? I don't even know what that means anymore. Neither do they. You know what? Nothing was worse than those summary economic projections, the dot plots. I didn't understand those. They had no validity for anything. But there were a lot of people in the media who that's all they wanted to know about. Oh, what are the dot plots? Oh, what are the dot plots? I don't know. What are the dot plots?
Ira, it seemed like the July press conference, Powell completely let the cat out of the bag, where he just basically said they're worried about everything under the sun.
Well, he said that again today. Yeah. I'll read it to you. It's towards the end. I have it. That's exactly what I said too. I made a snide comment when I annotated it. Here, this is turning to the current context. We are carefully watching developments as we assess their implications for the U.S. outlook and the path of monetary policy. The 3 weeks since our July FOMC meeting have been eventful, beginning with the announcement of new tariffs on imports from China. We have seen further evidence of a global slowdown, notably in Germany and China. Geopolitical events have been much in the news, including the growing possibility of a hard Brexit, rising tensions in Hong Kong, and the dissolution of the Italian government. I smart, you know, very flippantly about anything else. That about covers it. So, but it flies in the face. So again, this is a very divided Fed, because when I listen to all the Fed interviews and the speakers the last few days, they're all, you know, the hawks who set them up for bad things today anyway, were all, you know, pushing the other way. Again, data dependent. And wait a minute, Kathleen Hayes yesterday in late afternoon did an interview on Bloomberg Radio I happen to listen to because I'm a great fan of Kathleen Hayes. And she was interviewing Governor Orr of the RBNC, and actually asked him about the 50 basis point cut. And you know what? And he was saying, well, we have to get ahead of this. We see these things totally antithetical to what everybody from the Fed said. You would have thought they were on different planets. Because he says, we're getting ahead of this. We see these danger signs and we just want to get ahead of it. Because there is no justification for it. Because, again, if you, and I'm getting ad nauseum that they keep saying the employment rate, the jobless situation. Okay, but everybody who's been cutting rates, they also have strong job environment. New Zealand is very strong, so they really play into Trump's hands. They make Trump look right, and that's not good. You know what? They should make everybody uneasy because they do make Trump look right because he goes, hey, they're just playing with their currencies, and at the end of the day, that's what they're doing. Because how else do you justify cutting your interest rates from 1.5% to 1%? That's a 50 basis point cut, and yet your unemployment rate is so low. Germany, they keep talking recession. Germany, unemployment rate is very low. So tell me what your real data metric is. I just don't know. But yet these Fed people sit there and bang and bang and bang. You know what? That's why I know Clarida was, I'm going to have to go back and watch the tape of Clarida. I don't know what he said. But he was the one back in April and May. He started voicing concern about the global situation and what everybody else was doing. And the dollar was too strong. And yet, I could see it's the Powell Clarida team within the Fed who are pushing this. And they got some people to go along. But there are those who are pushing back and looking totally at the domestic situation. But the Fed told you, Vice Chair Clarida, that what I call their steam engine. Congress may not have given you steam, but you have to pay attention to what is going on with the financial system. And that's what Clarida's been speaking to. And yet, all the dissension, and Rosengren, who I have very little respect for him, he's been all over the road for the last few years. But Esther George, I have a lot of respect for because she's been consistent.
Ira, we're getting a lot of feedback from your phone.
Oh, I don't know why. Sorry. Okay, well, I'm going to go with this here, but these are important things. Again, we flushed some things out. Now we'll pay attention to over the weekend what comes out of G7 and exactly how incendiary Donald Trump gets. Oh.
Seems like he was just getting started today, Ira.
Yeah, I think so too. But we'll pay attention, and hopefully we'll catch it back up on Monday. Or I know Pax, you'll be busy Sunday night, so give me a holler if you got something, and we'll jump in.
All right, thanks.
Thanks, Ira.
All right.
Have a great weekend, Ira.
Oh yeah, that was definitely his phone.
Yeah, it was. I thought it was Peter breathing heavy for a little bit.